Investors and traders, welcome to the channel Market Chart Pattern. Today we'll be taking a look at the gold market. We'll take a look at the gold futures. Today is 4th of February 2023. This video is for educational purposes only and it is not a financial advice. What we are looking at is the daily chart of gold futures. Now, we have not made a recent video in some time for the gold futures. And the reason is that our target of 1900 per troy ounce was met, and after that the market was just moving in a range, but it was creeping higher. And the last video which we had done, and I'll put a link to that, we did mention that we were looking at this 1978, which is the 78.6% Fibonacci retracement level, as the point where the market can actually reach. And for the moment we didn't have any higher targets, and we were watching how the market was going to trade when it reached that level. We had even drawn this dashed line to show that this is where the 78.6% resistance level was coming. Now, just looking at this daily chart, what we see is we see two very negative candles, and gold has dropped way, like well, how much has it dropped? 1876 is from, yeah, it's dropped like $100. Now that's a fairly large drop in the price of gold. Look at here, it has been just going higher, 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 then it was creeping higher, and then two massive red candles which we see here. So perhaps some big player decided to exit the market. Quite likely, frankly, I don't know. What we can do is by looking at the previous price action, it kind of we have to go back and look at what happened in March of 2022, and that's when we had a very strong negative candle close. We had a 2062 to 1988, 1980. So we had roughly $100 drop in just one day. This one has been over 2 days, but significant. So there is likely to be a follow through in this a gold market towards the downside. So I'm just going to switch over to the weekly chart because it's going to be a little bit easier to see more history over a longer period of time. So here we go. So this is August of 2020. That's the all-time high reached, I believe. Yes, because this one is lower. So yeah, what we can see is that we had a negative candle here, and then the market just went into a downtrend which lasted for quite a while, and then we had just a trading range. And last year in March 22 there was an attempt for this market to move higher, but it failed to take out the highs of 2020. And now from the 78.6% retracement level, from here we do see a downward sloping trend line emerging here. What we are now watching is this level of 1839, roughly 1840, as the potential support, because this is the 38.2% Fibonacci retracement. However, there is only one level here, so this could be a weak support level, and maybe we get some sort of a bounce, or we'll have to watch how the price action will unfold. And there is also a structure coming very close to around 1822 here. So 1840 to 1822 is where we should look for potential support, because the structure and the 38.2% Fibonacci retracement level. Now, just looking at some of these previous declines, what we'll have to see is that in the previous decline, after this was the initial decline, and then there was a retracement, and this one, there was kind of the similar length, and what we could expect is, yep, so there is even a possibility that the market could go even lower and retrace about 50% of this entire move higher from 1608. And 1608 is a very important support level. and it actually the price had projected lower price here. You should go and watch our longer term videos, which we have done in that we mentioned why this level is really important, where the market had bounced last year. And so here there's a possibility, definitely looks like it could go even down to about 1800, which is the 50% retracement level. This we just get just by looking at some symmetry in the market, in the first declines that we have seen here and also here. There we go. So this one, the market did go lower, but then it just actually closed higher for that week. Okay, so this is gold. While we're on gold, we should also look at what's happening with the US dollar, because when the US dollar is stronger, then it impacts gold on the negative side in the US dollar currency. So what we see is that although we have a view that the goal that US dollar has actually topped in our view longer term, we had actually done a video about it. I'll post a link for that. In that we describe why we think that US dollar might have topped for quite some time. But look, this has been an amazing move higher from the 4th of Jan 2021. It lasted through September of 2022. So that's a long, that's like what, nearly 18 months move. And what the price has done now is, so it took about 630 days for from low to the high, and it took about, oh well, I need to take it a little bit now, 126 days to reach a low here, and it retraced 50% of this entire move high. So what we are looking at is a candle which closed strongly on its high. It looks bullish, bullish for the US dollar, and obviously we'll have to wait and see for the follow through. Because one candle, it's even if it's a strong candle, it's just an indication, but there is a possibility that we could be moving to 106 level in the US dollar, because that's the 38.2% Fibonacci retracement level, and see how this is opposite to what we are seeing in the US dollar denominated, sorry, in gold denominated in US dollars. When dollar is strong, the gold seems to be selling off, and in gold we are looking for 38.2% as a potential support level. In US dollar, we are looking for this 38.2% at 106 as the potential resistance level. So you can see how these two things are coming together. So this is what we are watching in gold. And if you like how we look at the markets and how we do the technical analysis, we look at the patterns, we look at Fibonacci ratios and confluence levels, then please do subscribe to the channel. Also hit that bell icon button, that way you will know when the new videos are posted. And if you like our video and the technical analysis which we are doing and posting for you guys for a lot of markets and stocks on daily basis, then please do smash that like button. That means that people are finding the videos useful, and then it just encourages me to make more videos, and the analysis that I'm doing for myself, I just bring it out for the world to see. So thank you very much. Please do subscribe. Good luck and good trading.